In this video, we will look at the concept of the iceberg order. So, what does the iceberg order consist of? It's a price ladder trading strategy where only a small portion of a large order is visible in the order book, similar to the tip of an iceberg, hence the term. This allows traders to basically conceal their true intentions and avoid revealing their full size of their orders, which could obviously deter other traders from engaging. The concept involves refreshing either the bid or ask at a very high frequency, often using trading robots to maintain the hidden portion of the order. Here, we will look at an example of the iceberg order in action. First, let's hide the other DOMs for now so we can focus on the price ladder where this phenomenon occurred. It happened on the Treasury bond 10-year yield, ZN. Secondly, it is very important to read the context of the market in conjunction with where the iceberg order is taking place. We can see that the price is about to break out of a volume profile based range. Buyers who bought at the low of the range know that there will be buyers at the high who actually want to generate a volume profile breakout. So these buyers will have to click here in order to take market orders and lift the offer to make a tick up. Now, first, before we are going to play the video, I will explain some theoretical part, I guess, right? Because if we look at the price ladder, we can see that we have here basically a volume profile, and we have here a volume profile, right? Now, this is a mountain, this is a mountain, and this is a valley, right? And just like how if we walk through a valley, it goes faster, right? And if we have to climb a mountain to get to the other side, it will take some longer time. And that also goes here, right? So at this point, buyers will want to generate a volume profile breakout at this here price level, right? Now, why is that? Because if they can make that breakout, they can make profits very quick and very easy, because within a range, price may move up, down, up, down, up, down, up, down, up, and so forth, right? It may go, from the high to the low, because this is the area where the current price thinks it's a fair value. However, if buyers are able to generate that breakout, then the rule of thumb is that the price will look for a new mountain or fair value, right? So it will go very quickly through that area, and then it can start to range here for a while, because this is now the new fair value, right? And it may do that a couple of times. It may come back, and then it may go higher again. It may go down to create a traditional breakout, right? Of price levels which have not been tested today during the session, the beginning of the session, right? So when buyers want to generate that breakout here, they will have to take market orders by clicking here, right? They will have to do that until this number is basically reduced to zero, and then they will clear that level, and then the buyers will be able to make that tick up, right? However, in this example, we will see no matter how many buy contracts, market orders buyers are taking, right? And that amount will be printed here in the inside print, right? So currently, buyers have clicked here or taken 144 contracts, right? So meaning they will have to take another 1,500 contracts, about, give or take, right? To clear that level and to make that tick up, right? So they will have to click 1,500 times here again in addition. And if they can clear that level, the price will make a tick up, right? And that will then presumably generate that volume profile breakout to the buyers who are looking for a potential entry around these levels, right? However, if you are a buyer who basically bought on the bottom of that range, right? Because I was not able to record it earlier, but we can see that price has been here, right? And then at some point it failed to make that breakout, and then it turned into a fade trade, right? So failed breakout, and then it went back to the range high, right? And at this point, again, buyers who would like to see a volume profile breakout here, they are very motivated to buy and generate that breakout, right? But if the buyers cannot clear that level, as in they cannot generate that breakout, then it can mean one of two things, right? Either the sellers are heavily defending the top of that volume profile based range, right? And we will know that if they defend it and start to attack to bring the price lower, right? But if they are only defending the level but are unable to bring the price lower, right? Then it will motivate the buyers to attack more to generate that breakout. Now, the second scenario is there are not per se sellers who are defending here, but it is the buyer who bought at the bottom of that range is now putting his buy order on the sell side because he has to get rid of it, right? And where better to do so at an area where he knows there will be buyers, right? So the buyer here places his order now here to get rid of, right? First, he will place 1,500 contracts, right? And if the buyers at some point clear that level or it comes very close to zero, then the buyer here will add another 1,500, right? To make profit from the buyers who want to generate that breakout, right? So technically, he will make a lot of money of these buyers, right? Now, if we then would look at what is happening, right? So let's play. Boom. And there you go, right? So suddenly we have about 1,100, buy contracts taken via market order, which are printed in the inside print here, right? And we now can see that 1,500 and some change contracts on the sell side here has now been reduced to 115. Meaning that, okay, if the buyers now click 115 times here, they will clear that level, make it 0, and they will have a tick up, right? But look at how this number is refreshing very quickly every time it gets close to, well, 10, 5, 0 contracts, right? So let's have a look. Boom. And there you go. We just had another few hundred contracts from the buyers who clicked here, right? Who want to generate that breakout, but they cannot move the market higher. Look, that 9 is 36. And wow, okay, let's go back because that was very quick. Now, let's see here. Okay. You see that, guys? This 15 contract, as soon as it gets cleared, let me try to catch it. Yes, here we go. Right? So what's happening here, right? First, the buyer who bought at the bottom here has placed a iceberg order via limit order, right? Because every time the buyers attacked, they could not lift the offer, right? And the price, I mean, the contract amount here kept refreshing instead of getting smaller. 0, clearing out, and a tick up, it just hold it steady, right? That level. And every time new contracts were added via limit orders. But now the buyers have cleared that level. Now look at what the seller will do. I mean, not the seller, but the buyer here who is getting rid of his contracts on the sell side to basically profit from these buyers who are still interested in making that breakout, right? So now that that level is cleared, the buyer here will now place or take market orders at this level. That's why this number went from, I believe, 147 to almost 800. And now look, boom. You see this? First, he absorbed all these buy contracts via limit orders. It was the tip of the iceberg. And now he has cleared that level. And now he is taking, market orders to basically get rid of his contracts faster, right? Apparently, there is a huge, player here who is getting rid of thousands contracts, right? Look at this level. I mean, 3,374 contracts printed here on the inside print, right? First, he absorbed everything from the buyers by placing an iceberg order here. And now that that level was cleared, he is now taking market orders, right? To get rid of his contracts even faster. And now let's have a look what is happening here. Boom. And there you go, right? So now that buyers again are attacking that level, right? He is again placing limit orders, right? So another additional 1,000 contracts here and another additional 1,000. So basically, all these contracts is from probably the buyer here, the big player, right? See, and it keeps growing. Again, he takes now market orders because that level was cleared by buyers, right? He got rid of his contracts via limit orders, and now he's adding again via market orders, right? To get rid of his contracts. Now, one contract attempt by the buyers to, see if the sellers here are still present, right? Let's see what will happen here. Now let me go a little bit faster forward. You see, and we cannot clear that level, right? Every time the buyers who clicked here at 0.90, right, again got absorbed, right? So probably again that buyer here who placed a limit order now because he can make one tick more profit at this level, right? And obviously now there is a lot less interest in the willingness to push the price higher. Suddenly the buyers here realize that they hit a wall, that they are facing a potential iceberg order, right? And an iceberg order, therefore, will calm the market, right? Because it may go back and forth at this level, this 0.80, 0.85, 90 level, right? Because these buyers want to break out, are unable, right? And the buyer here is basically getting rid of his contracts and placing them on the sell side to profit from these buyers. And at some point, these buyers here who had missed out an entry at the bottom, but now are trying to take the market higher from here, will weary out, right? And either they get scared and then they will also have to get rid of his contracts. And by getting rid of the contract and putting it on the sell side, it will generate, more pressure from the sellers, right? Because then the scary money comes with new money, and then the price may go down again. Let's have a look what will happen at this point. Right, so, okay, and now you see again, right? So last attempt by the buyers here, 1,400 contracts, totally absorbed. Another 1,000, 2,000 contracts, right? Totally absorbed. Here the ask keeps refreshing. You see, almost to zero, and boom, and we have now 5,000 contracts, guys, totally absorbed, right? The buyers cannot push the price any higher. Now, a mere 13 contracts as a last attempt, a Hail Mary. And, immediately it got countered with 763 contracts because, again, that buyer here getting rid of his contracts at these levels to calm the market is making profits along the way, right? At every price level from around 0.90 to 0.80, right? And now we can see that eventually the buyers will wear out. You see, now the buyers are getting less interested, and we see 1,000 contracts versus 2,000, almost 3,000, right? And that can be deliberately done by the buy side to see if the sellers will attack, right? And if they do, they will avoid buying and, generating that breakout. Instead, they will pull out, which will then give the power to the sell side. And in return, they will be able to push price lower again, either back into that range, to that point of control, or all the way to the downside. And look what happened, right? I will go back a little. Look, boom. Again, that buyer here getting rid of his contracts here just went again with another, 1,200 market orders as soon as that level clears, right? And yeah, like the buyers are still trying to attack, but everything is absorbed. And now, let me go forward a little bit. And let's see what is happening here. Yeah, so here we also see that basically this number is deliberately reduced. It's basically a bluff, calling out the buyers to attack, right? And as soon as the buyers will do that, right, this number will, again get bigger and bigger because it will absorb all those buy contracts. And let's have a look what will happen then at this point. And there you go, right? So let me go back a few seconds, right? Now, at that point, not only here, those contracts got observed, it immediately jumped to 3,000 contracts. And now, again, they are taking market orders here, which were 15, well, almost 1,600 contracts to clear that level with, just like in a blink of an eye, right? And we also can see that basically the price, now if this is the volume profile at its entire area, then this could act as the, well, I guess the value area of that volume profile, right? Because the value area is where most trades will take place, while those, slopes are basically out of that value area. There are still prices which are traded, obviously, but this is basically the center or the heart of this entire mountain or, value area, right? So it's very possible that if while that buyer here got rid of all his contracts to make profits from those buyers who wanted to make that breakout but failed miserably, right? This guy is very happy, right? He made a lot of money, and while this guy was, absorbing everything here, it encouraged other sellers to follow, right? And while seeing how buyers at this price level are all getting crushed by the, momentum and the volume and the sizes of the sell contracts, right? It will only encourage sellers more to push the price lower, right? And by the way, this guy who bought here is now obviously playing both sides of the market, right? He had bought here and is selling here. He is now selling here and he will buy again here, right? So he has made profit from the move to the upside and he is now making profit from the move to the downside, right? Once he has scared those buyers and he got an entire army behind him, right? So that is basically the, how can I say it, psychological part of trading price ladder. You can see the action happening, fear, greed. Basically, when the emotions get the better of most traders, then they will react. And seeing how those reaction taking place in real life is just wow. Gotta love it, man. But okay, enough chit chat. Let's continue and let's have a look how the price goes from this point further. Right, and you see the buyers again, and yeah, so let me go back just a little here, right? So what do we see again? The buyers, trying to prevent that the price comes back in that area here from 0.55 to 0.75, right? They want to keep that price out of this area, and perhaps even attempt again a second time to make that breakout. But again, everything is absolutely absorbed here, and immediately after the absorption has taken place, again, sellers will place market orders here to move the price with one tick in a blink of eye, and there will be like a lot of contracts printed here in which the buyers are not prepared to defend, right? And there you go, boom, another 1,500 contracts, right, from the sell side. And at this point, let's just see, yeah, another aggressive attack. Now the buyers are attacking back. Everything so far was absorbed, right? And now they are testing the sellers. Well, the sellers are also playing mind games. They are also bluffing, right? As in, let's reduce our number here to see if buyers will attack. And they are doing so. But that's just ideal for those sellers because they absorb everything. And perhaps it's still the same big player from earlier here, right? So as I described earlier, because of this volume profile, right, and that the iceberg order took place at the top of that volume profile, it is now basically ranging in, well, that 0.75 to 0.90 area, right? Those basically 3-4 ticks. However, eventually, if we would play it a little bit forward, actually, let me go a little bit faster because, yeah, you see, now we are getting a lot of, contracts from the sell side printed here in the inside print, right? And they are just, crushing buyers at this point. And as we can see, it came back in that area of 0.75 to 0.55. And if now, the sellers are able to push the price again out of that 0.55 area to 0.50, then we can expect even a more move to the downside, right? So let's just continue a little bit. Okay. Now let's see if the sellers can make that breakout here, right? At 0.35. So we are seeing that the sellers are attacking, right? And a very aggressive attack from the sellers. But now the buyers are, absorbing everything from the sellers, right? So, like I said earlier, the buyer who bought here was getting out here. So he has to place his buy contract on the sell side, and he was benefiting from the buyers here, right? Making profits who wanted to generate that breakout. And at some point, he totally shifted the momentum of the bullish, side to the sell side. And now he has gotten in here, and now he has sold to probably around this area, right? And now he's doing the same thing again, right? But obviously it's now vice versa, right? Because he had sold here, he has to get rid of his contracts. Where does he has to put it? Here on the buy side, right? That's why now these sellers are attacking very aggressively, but now this here number is refreshing and it absorbs all those sell contracts. And at some point, right, he is now taking profits from, the sellers who are here wanting to generate not only that volume profile breakout, but perhaps leading into a, traditional breakout, right? So again, he's playing the both sides of the market and also buyers against sellers and sellers against buyers, if that makes sense, right? So let's see then how it will end, because I think at this point, yeah, we will see some. Okay, and now you see, now he's doing the same thing, right? He is taking market orders. That's why this huge number was printed on inside tape from the buy side, right? First, he basically, got rid of his contracts via limit orders when the sellers attacked. Huge number. They could not clear that level and bring it a tick down. That was the absorption of the first wave of getting rid of his contracts. And now he's basically placing market orders to get rid of his contracts more, right? And if I now play a little bit more forward, right, and now sellers are again attacking, right? And we see that this number is not clearing, and now it's got cleared, but now look what will happen, right? So again, boom, just one contract, right? Not enough, obviously, to take the price lower. And immediately the 106 contracts after that, one contract totally absorbed, and now the buyers again are attacking, right? Or that seller here is now placing market orders again here, right, to get rid of his contracts. And again, boom, like it's a crazy number, right? So that's obviously now an iceberg order on the buy side, right, from the seller who has sold here from the top of this year volume profile based range. And that's basically it, guys. I mean, let's just recap it very quickly. Basically, an iceberg order means that if at a certain price level, and this is depending on the context of the market, right? Let's say we have here a volume profile like that, right? And we see that there are buyers who are willing to generate a breakout here. They have to click here and place market orders to clear this level to generate that tick up, right? Now, if there was a buyer who bought at the bottom, he's very happy because he can profit from these buyers who want to generate that breakout. He gets rid of his contracts by placing it here via limit order. And if it gets cleared, he places market orders to get rid of his contracts even faster, right? And the way we can spot iceberg orders is if this amount, is printed in the inside print, i.e. the buyers have the same, equal, or even more contracts, bought via market order, and this does not clear out, it's absorption, right? And if it keeps that happening, then it is probably an iceberg order from players, buyers, institutions, banks who bought here and profiting here. And on the other side, sellers may defend that level because they think, well, if it goes out of that area, it will be no longer a fair value. So let's keep it here in our control, right? And, they will give their all to defend it. And if there is not an iceberg order here, right, and the sellers are unable to defend that level, then obviously we can still have that breakout, right? And then sellers are defending, they are pushing the price a little bit lower. But at some point, if the buyers retesting those sellers here, right, and they cannot defend themselves and not attack, right, then it will motivate buyers to do so, to generate that breakout. However, if, buyers are trying 1, 2, 3 times to break out of that volume profile based range, and they see every time they attack and try to lift the offer, everything is absorbed, right? And, they will gradually, systematically pull out of their position because they realize they hit a wall and thus a potential iceberg order, right? So these are the areas, like if you are a buyer here, this is an ideal area to place an iceberg order, right? If you are a seller who is selling here, the ideal area to place a iceberg order is here, because that, okay, there will be sellers who want to generate that breakout to the downside, and vice versa. If you are a buyer here, you will place the iceberg order here because that there will be buyers here who will want to generate that volume profile breakout, right? So it's like playing mind games, 3-dimensional chess, I guess you can call it. But with an iceberg order, you have to be careful and don't get into hope mode, and just look at what is happening, the interaction between buyers and sellers, right? What is happening in the inside print? Where is it happening based on the volume profile, right? And based on the overall context of the market, then you can decide to take a short here, right? And if you can also try to take a buy, but if you see that you cannot, benefit from that strategy of the breakout, then you can get out of your entry or with a one tick loss, because the price is moving faster through valleys than mountains, as we saw earlier, right? So it will give you still the opportunity to generate that breakout. And if you're wrong, if you see that that strategy will not work, well, you can make a strategical decision, right, to exit and not sacrifice your money, right? So that's basically the concept of the iceberg order, and I will see you guys in the next video.